Okay, so today I really want to do two things. The first is to provide our outlook for water markets in the southern Murray-Darling Basin in 1920. And the second thing is to talk about some of the structural changes we're seeing happening in the market and talk a bit about some of the implications of those. And so the motivation for this work is really, Andrew's already touched on it, but we've got this drought that's been developing. There's also this expansion of almonds and perennial plantings in the southern part of the system. So we started thinking about, well, what does all this mean for water market prices for next year? So what we've done is we've developed three scenarios, noting the uncertainty about where this all might end up next year, but we've developed three scenarios: a wet scenario, which we all hope will happen, but sounds like might be probability that might be fairly low, an average scenario and a dry scenario. And so what we've done is we've based this off those state government outlooks that Andrew mentioned. We've had to make some assumptions in there as well, but we've got these three scenarios, and using our water trade model, we've applied these scenarios to provide an indication of where we think prices might go next year. And so, just a shameless plug, we released a short note explaining this work on our website this morning, so please go and have a look at that later today. And there's also other research up there that talks more about the structural changes that I'm going to talk about. So, in terms of what's been happening to allocation prices, well, the last couple of years they've been on an upward trajectory. And just a reminder for those not heavily involved in water, allocations are the annual right, the amount of water associated with a long-term entitlement, and these are generally tradable, and the prices here are for those annual allocation trades. You can see their prices are fairly well correlated with storage levels, and in recent weeks prices have been hovering around that $450 per megalitre mark. And they have been relatively high this year, but you know that is kind of as expected. It's been very hot and dry, and overall allocations for this year I think are about the lowest level since about 2009-10, so it's not completely unexpected. So in terms of allocations next year, we've gone the extra step and taken the outlooks and turned them into some possible allocations. So what are those levels? Well, I've presented some of the key ones here, but in Victoria, what's happened there is they've produced outlooks for wet, average and dry, and we've basically just picked those scenarios up and put them into our model. New South Wales have said that for general security water, under a dry scenario, allocations will be zero. We've had to make assumptions about average and wet. And for South Australia, we've just assumed they're 100% as they usually are. Of course, it is early days and there's quite a bit of uncertainty about this, so it's not to say that allocations outside of this range aren't possible. If it rains a lot, they could be higher. If it's drier than these, then allocations will be lower. So what does all that mean in terms of actual water that might be available for irrigation and environmental watering? Well, even under the dry scenario, we're still expecting that the total amount of water available will be higher than the lows we saw during the peak of the Millennium Drought back in about 2008. We are, however, expecting less water to be carried over into 1920, and that's just a function of how dry 18-19 has been, so there'll be a reduction there, we think. What does this all mean for prices? Well, it's not as simple as just saying, well, let's go back in time and find a year where we had a similar amount of water available and say, well, therefore that's what the price is going to be. There's a few reasons for that. It depends a fair bit on where the water actually is in storage. That's one of the factors. So back in 15-16, we had quite a lot of water in New South Wales relative to Victoria, but at the moment we've got the opposite situation. And there are different policies about how water is allocated in New South Wales versus Victoria. So Victoria generally are more conservative, they hold water back for the following year. So what this means is you can't do a simple comparison to say, well, this is what prices will be next year. The other thing is there's been a bunch of changes happen in the water market over the last 10 or 15 years. So this includes things like changes to carryover rules, trade rules, the changing profile of demand as we've seen almonds expand, and also, of course, we've had environmental water recovery under the Basin Plan. So actual prices, what we've done is we've got a water trade model that takes account of all of those changes so that we can provide an estimate of what might happen to prices next year. And so for these scenarios, the dry, the average and the wet, the numbers are up there on the screen, but basically we're saying they range from about $190 per megalitre in the wet scenario up to about $470 a megalitre in the dry scenario. And I guess our take-home message from this is that even in this dry scenario, we aren't expecting prices yet to go to the level seen during the peak of the Millennium Drought. And as I said a bit earlier, well, that's because there's still actually more water available, we expect, for next year compared to the peak of the Millennium Drought. But also we've seen these structural changes in the market. So, for example, we've got, since the Millennium Drought, carryover rules have changed quite substantially. And what that means is that there's more of a buffer in the market. So people carry over water, and when dry conditions occur, people draw down on those carryover reserves, so there's an extra buffer in the market. Across the whole of the southern Murray-Darling Basin, we've also seen this changing profile of demand. So yes, there is extra demand for perennials like almonds further downstream, but we've seen this being more than offset by reductions in other sectors. So, for example, pastures and rice. Of course, significant variability is possible, so prices could, within the year, go higher or lower than the averages we've presented here. And I think an important point to make on this is also that because allocations now have a future element in them due to carryover, there is a possibility that later in 1920, if the outlook for 2021 becomes more pessimistic, then during 1920 there could be this increased demand for purchasing carryover to take into 2021. So there is an upside risk there as well. Of course, if it rains a lot, prices will fall. So under the average and dry scenarios, Murrumbidgee allocation prices are expected to be higher in 1920 than in other regions, and the Murrumbidgee is a bit of a watch point for us. So if it does turn out to be particularly dry in the Murrumbidgee compared to other valleys, because there is an import limit into the Murrumbidgee Valley, it is possible that prices end up being much higher in the Murrumbidgee compared to everywhere else. So that's certainly something to keep an eye on. And in the dry scenario, the lower Darling trade limit, we're modelling that to restrict exports from the region. That has the effect of leading actually to lower prices in that region. So there are these interesting possibilities with different prices popping up in different regions. There's also some interesting net trade patterns emerging. So in 1718, we saw net trade out of the Goulburn-Broken system and net trade into the New South Wales and Victorian Murray region. And again, this is associated with water leaving pastures out of the Goulburn and moving into the perennial plantings further downstream. We saw a similar pattern in 1819. And in 1920, it all really depends on how seasonal conditions play out and which scenario comes true. So, for example, in the wet scenario, we see here the Murrumbidgee returning to being a net exporter of water because there is excess water in that valley. In the Victorian Murray, under the wet scenario, we see them importing even more water, and the reason for that we think is that a bunch of annual crops start to come back into the mix. And under the dry scenario, we see water leaving the New South Wales Murray and South Australian Murray to meet demand in that Victorian Murray region. So what I'll now finish on is some of those structural issues that I talked about earlier and try and highlight some of the implications of those. So as I mentioned earlier, we think the demand profile for water in the system is changing. So we did some work last year to explore this issue. And the conclusion we reach from that is it's no secret, of course. The demand has increased in the Victorian Murray, and that's associated with the almond and perennial plantings down that way. But this has been more than offset by a reduction in the Murrumbidgee region. So the net effect of this is we still think there's less water being demanded in the entire system. So it's important to have both sides of the story when you're thinking about what will happen to prices. But there is a caveat to this. This analysis here was based on data up to 15-16, and we know that the demand for almonds has probably increased since then. So we ran another scenario where we increase the amount of water demanded by almonds. So yes, we do find that there's an increase, but still overall the net effect is less demand overall in the southern basin for water. And looking at the most recent data that we have, we actually think current demand is probably somewhere between those two scenarios. But again, a bit like the Murrumbidgee, we think this is a bit of a watch point. So the Victorian government put out some work a little while ago where they undertook some analysis of what the demand for water might look like over the next 5 or 10 years. And what their conclusion from that is that they're expecting demand to increase quite significantly, and that's as a result of the almonds that are in the ground at the moment that aren't yet at maturity, and as they mature, they will demand more water. So almonds is certainly a watch point in the longer term. So an issue that this changing demand profile does bring into focus is the trade restrictions, the trade limits that are in place in the Southern Basin. And so as market participants look to move more water around the system, we think that more trade limits will become binding in time. And so there are some sensible reasons. Andrew touched on some of these before. There are some sensible reasons why you've got trade restrictions in a system like the Southern Basin. There are physical reasons you can't move water uphill, and there are property right issues, and there are environmental considerations that if you allow completely free trade, there are some issues. So the point I'd like to make here is really, well, it's something that probably basin governments need to pay some attention to figure out if there's a way that we can still be cognisant of those physical realities and property rights and so on, but is there a way to change those rules in a way that allows water to be traded more freely while not mucking up those important reasons why you do need some trade limits. And finally, we are actually seeing a change in the distribution of water prices. So what we've done here is we've modelled what would have happened with a rerun of history with today's water market conditions, so today's carryover, today's trade rules, water recovery under the Basin Plan, etc. And we run that through the model to say, well, what does the distribution of prices look like, history versus the future? And what it shows is that we're expecting many less years with prices under that about $170, $180 per megalitre, and many more years with prices above that $200 per megalitre, up to about $400 or $500 per megalitre. Now, the reason this is important is, well, there's probably a bunch of industries that have developed over time that have relied on relatively low water prices. So a situation where you've got less years of lower water prices, that's got implications for those industries to try and adjust to this. But there's also an issue there for governments that no doubt they'll come under a fair bit of pressure to help out with this situation. So this is probably something worth thinking about as well. So thank you. And finally, a big thanks to the water team sitting over this way who have done all the work that underpins this presentation and have made this possible. So thank you.